S&P 500 posting gains since last week, yet the Dow Jones 30 index appears to have weakened, following the announcement that a debt ceiling deal had been reached. However, until the debt ceiling bill is passed by Congress, market worries tend to persist. In this report, we aim to present the recent fundamental and economic news that impacted the US stock markets, look ahead at the upcoming events and that could affect their performance. Since last week, the S&P 500 and Nasdaq 100 indexes appear to be reacting positively to news that US President Biden and House Speaker McCarthy had reached the middle ground in regards to agreeing to terms for raising the debt ceiling, which would see the debt ceiling being raised for another 2 years, thus providing some stability for US stock markets in the long run. Debt ceiling included concessions from both parties in order to appease both sides of the aisle, who are expected to vote on the bill today in the House of Representatives. And should it pass, it will be handed over to the Senate before making its way to US President Biden's desk to be signed into law. The prospect of the US preventing its self-imposed debt default, which allowed markets to gain momentum and aim for higher ground as market worries over recession were decreased. However, following statements that there was significant opposition from both Democratic and Republican lawmakers to vote in favor of the bill, market worries were heightened as the possibility of a US default was back in play. Hence, given the new ex-date set by Treasury Secretary Yellen, which may be as soon as June 5th, the equities markets edged lower. However, equity traders may be concerned with the release of the JOLTS job openings figure, which is due during today's American session. However, the highlight of the week for equity traders is likely to be the US employment data on Friday, where the labor market tightness is to be seen, with market analysts expecting that there is a slight deterioration in the tightness of the employment market, thus potentially weakening the US equities markets as consumers may be faced with less disposable income to spend on goods, should the predicted reduction in hourly earnings come to fruition. In conclusion, the possibility of the US defaulting on its debt as a result of political pushback may have soured the market sentiment around the US equities markets as we edge closer to the US default. The main reason behind Nasdaq 100's spectacular rise in the last few days could have been the earnings report by now chip behemoth NVIDIA, which projected that its sales would rise to 11 billion for the 3 months ending in July, compared to Wall Street's forecast of 7.2 billion. In addition, the company announced that it anticipates that other companies such as Apple and Google would potentially use its GPUs to create alternatives to compete against ChatGPT, boosting market optimism around the company's future earnings. Furthermore, the AI continued hype surrounding this announcement facilitated NVIDIA's meteoric rise to a temporary market valuation of $1 trillion, and thus carrying the Nasdaq 100 index on its shoulders to the moon.